multifamily properties, prices I am seeing right now, I never seen those prices, that much discount, even in 2008 or 9.
I'm actively been looking to buy for the last 18 months and actively buying, but I'm not in LA. I am in Indianapolis and I'm in Tulsa because years and years ago, I could buy a 10 gross multiplier. I could buy a 10 GRM in Van Nuys, literally in 2000 or 2001. But I stopped buying in LA like 7 years ago when I went back to buy. I chose to not buy in LA because the cap rates were so compressed. I am Christina Suter, and this is the Real Estate Breakthrough Show, where we talk about the reality of real estate, the mindset you need in order to face the reality of what it is, and tips and tricks to get you moving forward in investing. I am your host, Christina Suter. Hey, you, this is Christina Suter with Real Estate Breakthrough, and I have Sanjeev with me, and we were in the middle of a conversation. I said, I have to record this right now, because he's talking about news on the street. And I feel like news on the street is so incredibly valuable to you guys, my listeners, because you really want to be in the business. So Sanjeev, tell me, what are you finding in LA right now? And why is that important?
Thanks, Christina, for having me.
Sure.
Great conversation we had. So, a little bit about myself. I'm Sanjeev Bhatia. I am a founder and president of LME Investment. We focus on a multifamily in Los Angeles City and County and the surrounding neighborhood. And as we were talking, right now, multifamily properties, the prices I am seeing right now, I never seen those prices, that much discount even in 2008 or 9. The reason interest rates are double within the last 3-4 years, insurance, and the regulations by California, Los Angeles City, and LA County, which is most of the investors are scared, or they were buying the property, were thinking that, oh, we are buying the property in Los Angeles, so the property will appreciate, and they were overpaying. And now, with interest rate got double, expenses are double, rental market is soft, and I am seeing property in a good part of Los Angeles. Some are even trading at 6+ cap.
Right.
And the GRM, I'm moreover a GRM gross rental multiplier guy. The properties in a better part of a Los Angeles were trading for 15, 16 GRM. That was normal. Right now, you can find on a 11 GRM. So this is a perfect window if somebody has a capital to deploy in the supply-constrained market like Los Angeles.
You said it beautifully. You said it so perfectly. Like, I'm actively been looking to buy for the last 18 months and actively buying, but I'm not in LA. I am in Indianapolis and I'm in Tulsa because years and years ago, I could buy a 10 gross multiplier. I could buy a 10 GRM in Van Nuys, right? Literally in 2000 or 2001. And it hasn't existed since then. Right? LA moved the cap rates compressed so aggressively. And then, like you said, the interest rates doubling, insurance costs doubling, expenses going up. Now we're finally starting to see some of what we expected to see, I think, in the beginning of 2025. But now you're actually seeing it actually happening now at the end of 2025 and maybe even to 2026. What do you think?
I think there's a word called pretend and extend, or like lenders are extending. They're thinking the market will come back, and some of those borrowers have a relationship with the bank, and the bank do not want to take over those properties. So they're just like a kind of expanding, and they're getting to the point now, some of those borrowers are not able to pay their mortgage. And there are few properties, there is already like they are in a conversation where the bank going to take over, or they're selling at the market at great discount. And even those properties are at the great discount, even the brokers are not getting any kind of a activity on those properties. So as you said, the Van Nuys market, or in that market close to that one, because I follow that market, is right now, if you have properties are currently in a 9 GRM, 8.5 GRM in that neighborhood, which is like, is get listed on the 11 and a half, but eventually get traded for 9 GRM, which, as you said, that maybe in it, we didn't see those rate drops, prices drops in the last 2 decades or 2.5 decades.
That is amazing to me, because I stopped buying in LA like 7 years ago. I stopped buying. 7 years ago when I went back to buy, I chose to not buy in LA because the cap rates were so compressed. And now being able to hear that the news on the street is that right now what you're seeing is that they're actually expanding, and you're getting a 7, 8, 9. Well, let's call it 8, 9 GRM in the valley is outrageous. And now that really fits, I think, your guys' sort of secret sauce. Like, the secret sauce of your company isn't just that you invest in LA. Why don't you tell us more about the secret sauce of your company?
One of the main things, whenever I acquire the property, just when on underwriting, I'm being so conservative, I just want to pay 20%, 15 to 20% less than whatever is trading in the market with a value add. Okay. So we are looking for at least 30 to 40% rental upside, want to pay 15 to 20% less than. I always think if I buy the property, for whatever the reason, if I do not execute my value add plan, if I put the property back in the market, am I going to lose money or am I going to walk away with a little bit of money? Because anytime you close any property, there is a 5% expense. To put it back on the market, that's another 5-6%. So that's your 10% is gone if you buy today and then sell tomorrow. So if you are buying on a 15-20% and good value add property, some other investor will take that property. That's the number one. When you buy, you underwrite conservatively, and then it's called a stress test the property. And then you hands-on operation. I have a property management in-house, so vertically integrated, which is it's a thankless job.
It is a completely thankless job. Completely. It is.
It is called, I deal with the triple T, tenant, toilet, trash all day. When the things are good, a lot of even new operators say that, why would you do property management in-house? That's like brain damage. You cannot grow by doing a property management in-house. I don't know about the other markets, but I can tell the market like Los Angeles or New York, the real operator who are successful, majority of their property management is in-house. So that's another secret sauce where we do the hard work, we roll up our sleeve, deal with all the property management issues, and then the third, we hold for long term. Because somebody tell they can turn around the property in 3 to 5 years, is very risky. Even when the market is good. Because if the market is good and suddenly then by the time you want to exit in 3 to 5 years, and if the market turn around, interest rate goes double, the buyer is not going to pay what you were expecting when you underwrote that property. So it's very important to have, at least then you are not dependent on the market cycle. Real estate, as much as is a good underwriting, manage in-house, lot of your luck also depend on the market cycle.
Well, you've owned, 35 properties, right? You guys have already processed through and had 35 closes. So, you have a depth of experience that you can bring to this over the last 40 years of being able to really observe how trying to play the market, trying to do that timing can be a bit of a setup. I think that's what this last cycle has really shown us, is that what you want to buy it under market, you want to value add it, you want to increase rents, and then you want to hold. Because to set up investors' expectations that you're going to be back out in 3 to 5 years feels to me like it's not letting you actually optimize the performance of the property. What do you think? You're the one with the depth of experience, specifically in multifamily.
You're absolutely right. Over the years, I started investing while I was in college. And I bought the property. I sold the property, almost double the capital. And after that, the property appreciated maybe 10 times more. Now you're literally thinking, I sold this property too early. I should have been hold this property for long. I could have been 10 times my initial capital for that. And then in some cases, I hold for long run. When the market was at the peak, I did not sell. And then the property value dropped, 40, 50%. And now I have to hold another 7, 8 years for that value to come back. So with that, once your property is at the max, at that time, one should exit. But if your plan is at 10 years, 10 to 12 years, and any time when the market is in your favor, then you exit. That's, I believe, I finding is the best approach. What is when the market is like, for example, people who exited in a 2021, they made a lot of money because everybody was buying, interest rate was so cheap, and they made a lot of money. At the same time, some buyers who overpaid, and they were thinking they're going to just going to make money. Now, if they just take a bridge debt, those are the operators are in trouble, right?
Yeah, and they are in trouble. I think the negative amortization, which is basically the cost of their bridge debt, the interest rate on their bridge debt, was higher than their cap rate. And I think that's another way that you can set yourself up for having a financially fragile property.
Absolutely.
When you guys do your underwriting, it really feels like, one, LA is ripe for what you guys are doing right now. Like it's ripe. It's hurting enough that you can find multifamily properties that specifically are at a GRM or a cap rate that works. What are some of the other core things that you guys look for other than the 30% discount? Is there other things that you really like, a certain type of damage, certain type of population, a certain class of property that you really focus on?
Great question. Christina, Los Angeles first of all, Los Angeles County and the surrounding counties, we have a supply constrained market. If you talk about just Los Angeles, it's very complex. It's just in the Los Angeles County, there is 70 cities inside. And all the cities have their own, the few cities have their own rent audience, rent regulation. LA city have their own, LA County their own, then there is a state, then there's a small properties like a Pasadena, cities like a Pasadena had their own rent control. Now Burbank and Glendale, they passed their own. Inglewood had their own. West Hollywood, Maywood, all these cities have their own rent control. So one thing is about, I'm a very niche based. So what happening in where I buy the property, I'm aware of all those, regulations, which is keep changing. It's like once 3 months later, they go back and change again. And this is where the beauty, if you know what you are getting into, which is not easy. By no means it is not easy. It is a tough market to operate. But if you, going back to those ones, you buy right, and then you manage well, and then you hold the property for long run. And we do not have a space where we can build unlimited as compared to other markets. So supply constraint is in our favor. And at the same time, we have a diverse economy. Olympics is around the corner. We're going to have a Super Bowl next year. So a lot of those kind of big events are happening. And we have two biggest sports. So there is so much different kind of each city have their own economy. And you pick one or two cities, you can even prosper by just buying the properties over there, as long as you understand all the regulations, rent regulation, and the operational challenges with that. So in our cases, we are niche based, and I just buy in a few zip codes. I'm not married to those zip codes. I can go outside, but at least I know what are the rents are in that market, what are the challenges in that market, and what's happening on a ground level, because we have a property management in-house. So when I'm buying, at least I don't go by any fake performer numbers. I know exactly what kind of rent I'm going to get, what kind of the same kind of asset you are buying. You even know that, okay, which lender are what is called comfortable lending in that market as well.
Right.
So there's a lot of things, not only 35% rental upside, also the where you're buying and the year of the property, bedroom size. Yeah. For example, we work with the veterans.
That's right. Yeah, tell me more about that. You work with veterans, and like there's a target market that you guys actually like.
Yeah, I think Christina, you got to.
I did. I muted myself. I was just saying you work with veterans, and I was like, that's one of your secret sauces is that you guys actually work with a very specific target market in some of your buildings. Please continue.
Yes, veterans and the Section 8. So, for example, love to house the veterans. They just is this sacrificed for our country. The least we can do is just help them with the housing. And when it comes to the veterans, for them is they need a one bedrooms, studios of one bedroom. So if I'm buying the property, so that's why number of bedrooms also makes I need to just, that's going to be a one thing. If I buying the property for this one bedroom, that would maybe for a veterans for that. If I'm buying the properties with the 2 to 3 bedroom, that may be for a different kind of a tenants. Maybe those are Section 8 families for that. All these different, when I'm underwriting, there's maybe a list of maybe 20 things I look for to just, and then based on that one, now I can just say that this is the price I can pay for that property.
I mean, you managed to rotate through $85 million worth of properties. So it's not like you guys haven't had time to really come up with your list of 20 things. When it comes to regulations, how do you find that you can use regulations to work for you versus against you? Like, I know one of the things when you said veterans that makes sense to me is when they're supported by the city or they're supported by the county, that there's a set rent that actually can be useful. That's a regulation that can work for you when you target, right, veterans. When you target Section 8, that actually can work for you. Is that your experience?
Great question. I always say that whenever there is a chaos, there is an opportunity. If you ask one of the toughest thing to operate in a California and Los Angeles is the regulations, because you have no idea. You can underwrite a lot of stuff. I can underwrite the operational expenses. I can underwrite maybe to the point, maybe what's the insurance going to cost on this property based on my existing properties, what kind of a rent I can collect, how much it's going to cost to do all the major ticket items, roof, updating the plumbing or electrical. But when it comes to the regulations, I have no idea what's a new law they can pass, and which is they keep changing. But with all that said, especially on the veterans and Section 8, if you look the Section 8 Housing Authority, they serve 64,000 families in LA City. LA County also serves 65,000 families. So that's including almost 400 members of those families. And when it comes to the veteran, that's a totally separate. And current administration, that's supporting that. LA City, that's supporting that. And then on those ones, it's a win-win. You're housing the veterans. You're getting a guaranteed rent on the first. Mm-hmm. And then you can just target certain properties where you can be just exclusively for the veterans or for the Section 8.
Well, and since you guys do your own property management as well, it seems like you guys can control what's coming into your property. So you can create a purpose for that property, whether it's veterans, whether it's Section 8, then you can choose who you have in those properties with a little more dexterity. I mean, yes, LA has its own regulations. You don't get to choose your tenants as maybe as easily as I get to in Indianapolis.
Yeah.
But there is still that capacity for being able to say, this is our population, this is who we're serving. And then you guys get to implement that because you have your own in-house property management.
Absolutely. As if we follow the fair housing laws, we just whatever we can help with our veterans and Section 8 and other folks under the fair housing laws, that's what we follow. And of course, like we welcome all sorts types of payments to our into our properties. But if we can just help with the most needy, that's always our priority.
That is very helpful. So you were saying when we first started the show, before we turned on the recording, that I was saying, with your 40 years in real estate, when you first started in real estate, maybe you weren't as careful or as thoughtful. Do you have a story for us or two on, I started 40 years ago, I can tell you some very funny stories and lessons I learned from those stories and now has made me a better investor. So tell me some of your early stories about, I don't know, something that happened that didn't go the way you wanted it to, either unique or entertaining, and what you learned from it. Because I think what we learn from these stories is really the takeaway, right? How are we a better investor because of the stories we've passed through?
I am a value-add operator, so I have tons of stories. I can write book on those. Um, I can share multiple. One of the, in the starting, sometime I was even for as simple as that, not doing the what is called the sewer camera inspections when you
Yes.
put the camera. And I remember it say, I can see from outside the seller change the main line from the driveway. I can even see a new cap and the driveway was fixed. I said that was, for me, was no reason to just, it was maybe, I don't know, $250, $300. After I closed a week or 10 days later, from the vacant unit to the that driveway, the main line was broken. And that's easily 20 grand or 30 grand on a small property. I'm talking about a long time back. So lesson learned, I said, even if at least I need to know what I'm buying into. So inspections are very important. Never save money on the inspection. Even on properties looks good, always inspect the property. Because in the Los Angeles market, when the market is booming, some of those brokers, they will not even give you a time if the property, they just put the property at discount. I always want to buy the property, or I'll bought the property, every single property. I paid less than what other investors pay. And so for that, sometimes you have to close very quick. Sometimes I close the properties as maybe in 7 days, 10 days period. There's not enough time. But one thing I say, let me do the inspection. At least I need to know what I'm getting into for that. And another one, when I bought the property without checking all the issues come with the property, which is now it's very obvious. I could have been clearly see those, but the properties were priced so low. I bought those properties, and those properties have a drug-related issues. There was a non-paying tenants. Doesn't matter what you do with the property, you cannot you can go and fix the property one day, and the week later gonna look like trash again. And whatever you want to do, those tenants who live there, they want to live. They want to live in that condition for some reason, and because that's their safe place to do drugs and other activities. And for that, to clean that property was just sometimes it takes years. Evicting in Los Angeles is not easy. So there is a multiple, court visits, legal actions and all those in order to just provide. Maybe there's a couple of tenants out of that property who appreciate all that, but majority not, because they just want to live in that one so they can do whatever the other activities over there. So learn from those transactions there. Now I'm not only okay, price and everything is important. By going and checking those properties, if there's that kind of activity, I stay away from this.
Well said. I bought a building, 30 units. We thought, the guy said, yeah, the property's half empty because of X, Y, and Z. And of course, we believed their X, Y, and Z. And it may have actually been accurate that the property was half empty because of the X, Y, and Z, which was his wife's health. But then when we actually got a hold of the property, then we actually had our property. We heard that there was a drug dealer living in a particular unit, that he was dealing from the unit itself. And of course, we had a female property manager, on-site manager. So we sent one of our male partners to meet, to talk, to knock on the door and see what's going on. And sure enough, he was met at the door by the gentleman with a gun in his hand, wondering, what the heck are you, blah, 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 all this language coming out of his mouth saying, why are you bugging me? And well, in that moment, the partner walked away, because you're not going to question somebody who's standing at a door with their gun in their hand. We did get them out, and that took a series of steps, right? As you know, we got the police on the compound. We got cameras up so we could document the behavior. We were able to actually persecute against him and be able to get him out of that, and obviously evict him. But more than that, we actually were able to get camera footage that actually got him arrested for the activity he was doing. And but it took some serious, thoughtful coordination to not have the building be at risk, to not have the other tenants be at risk, but to still be able to get this gentleman out and his activity out, because none of the neighbors were going to rat on him. None of the other neighbors were going to show up in court and say, yeah, we saw him do X, Y, and Z. And so, you learn that if you have that kind of activity, you either need to be prepared for it, come up with a plan for it, or just not purchase the problem. There are certain problems that maybe aren't worth purchasing.
Yeah. And Christina, also, I want to add, in the starting, I'm a big believer in a second chance. I was a renter for a long time, and I made some decisions where, without doing all the due diligence, I did, to the point I was not I was not giving my units to anybody, but I rented to a few professional tenants, which is the word professional.
Yes. Professional tenants. They know how to use the law in such a way that it's almost impossible to evict them, or they're demanding of extra high levels of service in comparison to other tenants because they use the code.
Yes. Now, what, I love to hear all the stories, but at the end of the day, their documents need to support that. I'm still believe in a second chance, but especially in a market like Los Angeles, where the regulations are in the favor of tenants. So I'm 200% more careful when I'm just looking those documents and all those stuff. In the starting, I made those decisions where I was, okay, you know what, that person deserves second chance, and then I would just that end up costing a lot.
Yes, it can. And especially, second chances are great, but there's also sort of proof in the pudding. If you've really turned the corner, then there's the opportunity for them to show you they've turned the corner and how they've turned the corner. So I'm a believer of that. All right. Well, Sanjeev, I can't keep you forever. I'm afraid we've hit our time. So if people want to invest in LA with you, with LME Investments, how do they get a hold of you? What's the best way to contact you? Give them the information. And actually, I think you're doing a fund right now, aren't you? Are people able to invest in your fund?
Yes. Christina, I launched the fund. It's called the LA Multifamily Value Add Fund, which is we're looking for a passive investors. Mm-hmm. And it's very simple. They need to come with the capital, and we are the one who going to just do the heavy lifting on that. As we started I was saying, there is a good time window right now to buy property at a great discount. And we are a long-term hold. This is not a quick overnight rich thing. We just hold the property for long run. And if anybody want to learn more, they can reach out to me. I'm very easy to find on social media. They can find me on a LinkedIn, or go on the website, lmeinvestments.com, L as in Larry, M as in Mary, E as in Edward. Or my Instagram is Sanjeev B, E as a brother, my last name initial, LA. Or they can find me on X as well.
Sanjeev B, LA, that's great. So SANJEEV, and then the initial B, and then LA. So that's your social media handle.
That's for the Instagram. On my X is my full name, Sanjeev Bhatia LA.
That's lovely. That's lovely. Sanjeev, I so look forward to having you speaking at Phoebe Pasadena in 2026. I think it's fantastic. I don't remember what month you're scheduled for, but I know that we've been getting you scheduled. And people can find out a lot more about LME Investments, Los Angeles Multifamily Investors, and your fund, and hear more stories about what it means to truly be a investor in the Los Angeles market and using this time, this 2025, 2026 time, to be able to get quality properties that are maybe better quality than you would normally get, and how you're achieving that. So this is Christina Suter with Real Estate Breakthroughs. So excited to have you guys here. We will give you our next show in 2 weeks on all of our channels: Amazon TV, iHeartRadio, Spotify, iTunes, and a variety of other channels that we post on, as well as YouTube. So if you're just listening to this on podcast, make sure that you get a chance to see the actual video on YouTube and Amazon. Tune in 2 weeks.